Hey friends, welcome to today's Singapore Market Digest. I'm Wei from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. We've got a mix of news today, from offshore developments to digital banking gains and some healthcare headwinds. Let's dive right in. First up, let's talk about SeaTrium. This company is a big player in the offshore and marine industry. They provide engineering and construction services for everything from oil rigs to specialized ships. SeaTrium has been around since 1963 and is headquartered right here in Singapore. The stock closed at $2.30 on Wednesday, up 6.5% or $0.14. SeaTrium recently announced a Memorandum of Understanding (MOU) with BP Exploration and Production. They will work on a deepwater floating production unit (FPU) in the US Gulf of Mexico. SeaTrium will handle the engineering, procurement, construction, and commissioning for this FPU. This unit will support BP's deepwater operations in the Gulf. SeaTrium's stock symbol on the Singapore Exchange SGX is 5E2. The company's recent activities have generated substantial investor interest. As of February 7, 2025, the share price was $2.16, showing a slight decrease of 0.922%. The trading volume was significant at 17,784,400 shares. The 52-week range has been between 1.36 and 2.29, reflecting considerable price volatility. From a technical analysis perspective, SeaTrium has shown some volatility. The stock's movements reflect broader market sentiment and sector-specific news. The recent MOU with BP could positively influence its outlook. Investors will likely watch how SeaTrium executes this project and whether it leads to further contracts. SeaTrium operates in the offshore, marine, and energy industries. These industries are subject to global economic conditions and energy prices. SeaTrium competes with other firms offering similar services. Their expertise in engineering solutions and strategic partnerships like the one with BP are key differentiators. Now let's shift gears to iFAST, a Singapore-based digital banking and wealth management platform. Think of them as a one-stop shop for investments, offering everything from unit trusts to stocks. iFAST has been around since 2000 and has expanded its presence to Hong Kong, Malaysia, China, and the UK. iFAST's stock closed at $7.65 on Wednesday, which is up 1.5% or $0.11. iFAST recently reported a strong fourth quarter. Net profit jumped 46.3% to $19.3 million. Revenue also increased by 16.4% to $90 million. This growth was fueled by its core wealth management platform and the turnaround of iFAST Global Bank. The ticker symbol for iFAST on the SGX is AIY. iFAST's performance has been closely watched. The group's success is tied to its ability to attract and retain assets under administration. As of the latest update, iFAST Corporation has assets under administration of approximately $23.62 billion. Technically, iFAST's stock has been showing positive momentum. The strong quarterly results could reinforce investor confidence. Monitoring trading volumes and key support and resistance levels will be crucial for assessing future price movements. iFAST operates in the fintech and wealth management sectors. They face competition from traditional financial institutions and other digital platforms. iFAST's focus on providing a comprehensive suite of investment products and services sets them apart. Their expansion into digital banking also adds another layer to their offerings. Let's move on to Thomson Medical, a healthcare provider with operations in both Singapore and Malaysia. They're known for their Thomson Medical Centre, which focuses on women and children's health. Thomson Medical's stock closed flat at $0.44 on Wednesday. Thomson Medical posted a net loss of $12.9 million for the first half of its fiscal year 2025. However, revenue increased by 18.4% to $199.1 million. The losses were attributed to challenges in Malaysia, increased interest expenses from acquiring Far East Medical Vietnam, and the end of some projects in Singapore. Thomson Medical trades under the ticker A50 on the SGX. The group's recent financial results reflect a mixed performance. While revenue growth is a positive sign, the reported net loss raises concerns. From a technical standpoint, Thomson Medical's stock has been trading relatively flat. The healthcare industry is influenced by regulatory changes and economic conditions. Thomson Medical faces competition from other healthcare providers in the region. Their strategy to expand into new markets, like Vietnam, could drive future growth. Finally, let's discuss Digital Core REIT. This is a real estate investment trust, REIT, that focuses on data centers. They own and operate data centers, which are essential for the digital economy. Digital Core REIT closed at $1,515 on Wednesday, up 1% or $1 down 5/5. Digital Core REIT announced a distribution per unit of $0.18 for the 6 months ending December 31st, 2024. This is a 1.1% increase from the previous year. Revenue for the half year increased by 9.8% year on year to $54 million. Digital Core REIT is listed on the SGX under the symbol DCRU. As a REIT, its performance is often judged by its distribution per unit, DPU. The increase in DPU is a positive indicator for investors. Technically, Digital Core REIT's unit price has seen some upward movement. The data center industry is driven by increasing demand for data storage and processing. Digital Core REIT competes with other data center REITs and operators. Their focus on stabilized, income-producing assets in key markets is a key strength. So there you have it. A quick look at SeaTrium, iFAST, Thomson Medical, and Digital Core REIT. Each company is navigating its own set of challenges and opportunities. Remember, this is just a snapshot, and it's important to do your own research before making any investment decisions. That's all for today's Singapore Market Digest. I'm Wei from the Investing Iguana, and I'll catch you in the next one. Happy investing!